Larry, first over to you and what you're seeing in markets at the moment. It looks like you're going to finish on the highs of the session despite all the concerns in Europe. Why do you think that is?
Well, I don't really know why that is. I'll tell you what, Kate, up until about an hour ago, it seems like traders, trading desks were really on edge. People were thinking that we might repeat an ugly close like we had on Monday, and everybody's so fearful of that. You didn't see a whole lot of big buying, people kind of standing to the side. However, to answer your question, it seems like people now are at rest, realizing we had some good numbers. Bernanke, if anything, came out a little bit dovish, and so all's well. And so here we are snapping back to where we were on Friday.
Yeah, absolutely. It's pretty incredible you can ignore those headlines, though. I mean, looking at European bourses, down by more than 2%, some of them.
Oh. Yeah, I know, and I think to your point, I think if that wasn't the case, we would probably be much higher right now. But what's been going on in the U.S. market is we've had this like dip buy mentality for the past several months. So every dip, people are buying, except for last week when we didn't see that. So now that we're back to some type of normalcy, people are afraid to miss out on this rally. There's very little conviction. I think people are buying because they have to, not because they want to. And that's why we have these knee-jerk rallies like you're seeing behind me right now.
We saw some volatility during Bernanke's speech. It seems like different things he said were interpreted differently. But on the whole, would you say it was a pretty dovish speech and tried to make up for some of the concerns that emerged out of that last set of minutes?
Yeah, no doubt about it. I mean, I think leading up to the minutes, I think the market got comfortable with the fact that they're going to do more with less, as it were, and that he's not going to really cut the program in half or anything like that. He needs to see some substantial growth, and I think the market's also pricing in the fact that, hey, maybe the Fed would let inflation go up a little bit higher than they want to before they dial back QE. So I think the foot's on the gas pedal. People are pretty comfortable with that right now.
Yeah, what about the comments he made about the sequester? He really reignited concerns that it's going to weigh on the US economic recovery. But just speaking to my guest host here, Steve Goldman, he did point out, look, you're going to get cuts whether this sequester is solved or not. That's the whole point of the deadline. So are you really that concerned about it?
Stephen is dead right. I don't know if he's Australian or American, but he's dead right. And yeah, I'm very concerned. Oh, go figure. But, you know, I'm very concerned with it. And the market, the perception of the market is leveraging so much on the second half of this year, just thinking that earnings growth is going to persist, it's going to continue, it's going to wipe away some of the brutal forces of the cuts, and GDP won't be as badly as people think because of all this great growth in the second half. It's an assumption that really, to me, it's a pretty scary one. I mean, I hope the market's correct, but a lot of things have to go right for us to have that kind of growth in the second half in the United States.
Let's talk about the currency markets, because that does remain volatile, that space. Are you jumping in and trading that?
Well, I've been dead wrong. I can't imagine being an importer or an exporter to Australia right now. I am completely bullish on the Australian dollar, and my condolences to all the exporters in Australia. But right now I'm going against the fray right now. I am bullish on the Australian dollar. Another thing that I'm also dip buying into the British pound against the euro. So the euro-British pound cross, I think it's well overdone and probably time to start buying that.
Yeah, betting against the euro. We certainly saw a pullback there overnight, and you think this will continue?
Well, for the euro, yeah, I do. I think it's going to be very volatile, but I think the medium-term trend in the euro is definitely bearish, especially with the, Italy going on right now, the coalition government or the perception. I mean, who knows what's going to happen? I think it's going to be headline risk baked into the euro for the next 6 weeks anyway.
Yeah, I would say we agree with you on the euro. Unfortunately for us, we've agreed with the weakening euro story for about a year and a half now, and every time we've tried to put that trade on, it's never made money. In fact, it's hard to put bearish trades on in Europe. The only thing that you can really do is buy German bunds. They are the flight to quality story. That's the only thing that seems to work in Euroland.
No, I like your transparency, Stephen, because I've gotten baked doing the same thing. And I think it's just a crowded trade, and it just shakes us all out. But I mean, we have the right idea, it just doesn't seem to work out.
Yeah, exactly.
Larry, let's move on to those new home sales. We saw a jump again overnight in terms of expansion in January. New single-family home sales popping up 15%. Pretty impressive. This recovery in the housing market certainly wasn't in our imagination, was it?
No, and it is a stunning number. It's starting, you know, from a 7-year fall or a 7-year flight of steps. So it is ratcheting up. We're not going to see numbers like that every month going forward. However, we're progressing in the correct direction. So with that, we're going to see a continued performance. We're not seeing it now, but financials and materials will continue to do well. It's going to help our economy. But again, it's not going to be a straight line, but very comforting to see that this morning.
And we've also got some PMIs, some manufacturing data due out later this week. And we've got some from Japan as well. I guess we'll be watching this one closely to see how the recovery there is tracking with the eye of whether we're going to see a whole lot more stimulus or easing there.
Yeah, and that's going to keep things very volatile. I don't think anybody's expecting Japan's PMI to hit near 50. However, I think people are thinking it's going to move in the right direction, and I think that's key. But I personally am watching, you know, the U.S.-China PMIs that come out towards the end of the week. It's something people perhaps discount a little bit. However, put that on top of the GDP number that's coming out. I think that's what's going to lift our stock market. I mean, people talk about all the macro risks, all the headwinds. At the end of the day, the biggest risk to our market is the lack of growth. So we need to see growth, even to sustain the levels we're at right now at 1,500 in the S&P 500.
And just finally, Larry, trade of the week. What do you like at the moment?
I like to sell the S&P 500 right here, sell into any strength, because again, the growth that we have, the growth that we've seen is not sustaining the level. I'd looked at buy back in about 1,400 to 1,450 in the S&P 500, but I would sell any strength, and we're seeing that today. Okay, interesting. Larry Shover from SFG Alternatives. We love chatting with you. Thanks for your time.